Welcome everyone to our next series in our webinars. Today we're going to be talking about insurance. Specifically, we're going to cover four areas of insurance. We're going to talk about life insurance, we're going to talk about long-term care insurance, disability insurance, and then umbrella insurance policies. So some broad insurance topics for your knowledge today. I'm joined by Andrew Randisi and Christopher Mallon. They're both certified financial planners here at Pennsylvania Capital Management. And guys, let's take it away. We'll start with life insurance. Andrew, do you want to kick us off with a little overview of the different types of life insurance?
Sure, Leslie. There are two basic types of life insurance that I would say most of us are familiar with. Usually, typically, the one we see a lot with your employer, if you have a W-2 job, would be term life insurance. Term life insurance, as it is coverage for a set period of time, often between 10, 20, and 30 years. And it's a very popular choice because it's used as a stopgap or a band-aid because it covers you for that particular period of time. It's often very inexpensive because I would say in most cases, it's statistically likely the policy is going to expire worthless because you'll outlive it. That's why it's often very cheap unless you have some underlying health condition that might make it more cost prohibitive. Really good way for especially in particular young people that are starting families or you just start a new job or going through a life change to get some insurance to cover wages, lost salary, paying for education costs in the event something might happen to you or your spouse. Then the other type of life insurance we often see is permanent life insurance. Permanent life insurance lasts your entire lifetime typically, so long as you pay your premiums up to date, and there's usually cash in the policy as well. Oftentimes we see these policies, you can borrow the cash if you so choose to do that, but it gives you more long-term flexibility for financial planning. Now, where do we see the permanent life insurance policies fit? Usually that could be coming in a couple different areas. One, it's often can be used to pay future inheritance or estate tax if the individual or family or couple's estate might be well over the lifetime exemption. We also are seeing it to do some wealth transfer as well. If mom and dad say, hey, want to spend all their money down, the life insurance policy refills the pot for future heirs. And then last but not least, we often see it used for setting up trusts for children or dependents or grandchildren that might have special needs.
Great. Thank you
Yeah.
for that little overview. I was just going to add a little personal note that on the term life insurance, I have two kids, and when my kids were born, I got term life insurance when they were born, and they're twins, and I got 20-year policies, thinking, okay, that'll get them to early adulthood. And then when they were turned about, I guess 10 or 11, I realized, man, getting them to 20 or 21 isn't probably going to be enough, especially because I'm a single mom. So then at that point, then I bought another. I think I bought another 10, I bought another 15-year policy at that point. And really, the whole thinking for me was just to make sure that if something happened to me, that my kids weren't going to be really struggling beyond comfort survival levels. Yeah, just wanted to throw that out there. I think term life, and it's given me a great deal of comfort over the years, knowing that if something did happen to me, that my kids weren't going to be really destitute. So just wanted to throw that out there.
That and it sounds like it's also not costing you an arm and a leg.
No, not at all. It's been very inexpensive.
Yeah, the term ends up being very cheap. Permanent obviously costs a lot more because there's a guarantee to the payout. I'd say the permanent policies that will interact with more is almost we'd say that term policies are definitely a need for almost every family out there. And that the permanent policies it can be a need in a certain higher net worth situation to help with transfer tax and things like that. But then it's can be a want, I'd say, if you're not necessarily in an estate tax planning realm. If you just want to have a certain box checked. Oh, I know if I spend X, Y, and Z amount of dollars, my heirs are going to get ABC dollars, no matter what. Yeah, that's usually when we see that come into play more.
Sounds good. A little overview on life insurance there for you. We can move on now to long-term care insurance. Chris, do you want to give us a little overview of what
Yeah.
long-term care insurance is?
Yeah, so I'd say all the different types of insurance we're talking about today First off, is covering essentially we look at it as the big risks, right? Whenever we're looking at things through a financial planning realm, it's what derails the whole plan. So obviously a death while in peak earning years is obviously a big one with the life insurance. And then long-term care is something that a significant amount of us will eventually have to pay for. Some like 70% plus will need some type of long-term care, like help when you get over age 65 and onward. So I'd say there's two different types of policies, one of which doesn't really exist anymore. Your traditional long-term care policy would be, it sounds like you pay a certain amount of premium and it's going to cover a certain amount of benefits per day if you of a long-term care event happens. Not entirely dissimilar to how like a disability policy would work. There is a waiting period before benefits start kicking in. And then sometimes it's usually a certain dollar figure or a certain percent of whatever the costs are would be covered by the plan. However, those don't exist in that format that often anymore, mainly because the policies, as we started living longer and longer, it wasn't financially feasible for insurance companies to write them that way. So what we pretty much see now is people getting these called hybrid policies. So it's a life insurance policy. However, it has very strong long-term care benefit riders. What that allows you to do is essentially to use the policy almost in an either or situation. And so it'll have this life insurance benefit, and then it allows you to use a certain amount per month from that benefit to long-term care expenses, which is nice to see. It's, hey, say you fund this policy and then you don't end up needing long-term care benefits from it, then you pass away and then your beneficiaries will essentially get how the math usually has worked out. Policies we've seen end up at least getting your money back typically that's paid into it. Or if you need the benefit, then you can use the long-term care benefit, and then the beneficiaries will receive usually almost nothing at the end of the policy if it's drawn down for long-term care benefits or significantly less. So it is a nice comfort factor to have. Considerations there, they are expensive, and it's important to weigh the cost benefit of, okay, should I self-insure, essentially looking at, hey, this is what the premiums cost versus what if I just put this money into a separate account and saved it, and how much could that pay for in the future? It's balancing those two things. And then the timing is really important too, because if we run quotes for people who are in their mid 60s already, it's pretty cost prohibitive at that point. It would really be I want to say almost more of a mental accounting situation. It's like, hey, I don't necessarily care what this costs. I just want that box checked. I don't want to worry about it. Maybe not the most efficient use of cash, but we'll do it. I'd say that sweet spot ends up being typically, would you say what, like early 50s, Andrew, is when it makes some sense. You can do 10 pay policies that kind of line up nicely with peak earning years and still some time for the policy to not be too expensive. And
Yeah,
then there's health underwriting too. So that usually ends up being the time. We don't see tons and tons of them because when you run that analysis, it's almost ends up being a tomato situation versus self-insuring versus buying a policy.
yeah. Typically, the time to do it is the earlier the better. And you want to be healthy too. If you're a walking disaster or with your health, with underlying health issues in your early 50s, you're likely not going to want to be a candidate to want to get one of these policy, a long-term care policy. And what we're often also seeing clients do, which is, Chris, getting back to your point of the self-insure route, in lieu of one of these policies, we're seeing a lot of clients decide to go the continuing care retirement community route, CCRCs, that often include a long-term care benefit as part of the entrance fee. That does help cover a lot and manage a lot more of the future healthcare costs for what might be needed for assisted living or nursing care or memory care if one of your loved ones gets to that point with their health.
I think that's a great point, Andrew. I think a lot of people don't realize that in lieu of getting a long-term care policy, your plan can just be, I'm going to go to a continuing care retirement community instead.
Yeah, it gets bundled in, which is nice.
Yeah, I think that's a great point. Great. Thank you, guys. Let's move on to disability insurance. Talk about that for a few minutes.
The
Andrew, do you want
often
to?
the often forgotten insurance that most people don't think about, because I'd say statistically speaking, you are more likely to have a short-term or long-term disability event than get struck by a bolt of lightning or go down in an airplane or sink with the Titanic on a cruise ship. So it's one thing you want to make sure that your income is protected, especially if you are the higher earning spouse or the sole earning individual in the family household. And oftentimes for W-2 employees, you'll be able to get employer will offer short-term disability. Most times that'll be included as part of your benefits package. That's good to have, but often it doesn't usually cut the cheese 100%, because what it's going to be doing is typically only working for maybe 3, 6, maybe up to 12 months on a short-term policy. It's often better to additionally have long-term disability insurance, that if you do have a serious medical issue that prevents you from working for years or until disability age, which would be, or Social Security age, which would be 67 for most of us, it's good to have that, be able to make sure you have your income protected. A couple of things that one can do is review your employer's disability benefits, see what's included as part of your compensation, or see what also can be purchased ad hoc additionally when you come up for benefits renew once a year. You can also purchase a policy outside through an insurance broker. And typically what you want to aim for is making sure at least 60 to 70% of your income can be replaced by a disability insurance policy. And you also want to be making important that when you're looking for a policy and reviewing the fine details, that you want to make sure it covers both illness and injury, and has inflation protection, and also covers your own occupation.
Yeah, I think the own occupation one's important because that'll be if you are, so it's either own occupation or like any occupation, right? So if you get some sort of injury that prevents you from working at say you work a white collar job and then you're working at a desk and you get some sort of injury that prevents you from doing that, but you're able to do other things, and it'd be like, oh, you're able to work in some capacity, so you're not going to get paid your policy, versus if it is own occupation, it's okay, you can't do this, that's your own job, then you'll get your benefit. So it's important to have that distinction.
Yeah, the best example would be a surgeon. A surgeon needs their hands. They could still if they can't use their hands, they could still do another job. But you want to make sure with own occupation disability insurance, you're getting income replaced for your own job, which would be being a surgeon.
Yep.
Good point. Thank you. I hadn't thought of that. I didn't know that they could write the policy so that as long as you could work any job, you wouldn't get benefits. Is that the idea?
Yeah, so that would be like a disability where you're significantly more hampered.
Yeah. Okay.
So theoretically, a surgeon, they could work.
I mean, as a receptionist or something.
Exactly. Yeah.
Yeah. And they wouldn't get the disability policy if it hadn't been written specifically for their own profession.
And then their own occupation.
Their own occupation. Yeah. Okay. Good to know. All right. And our last important topic, and I know we talk about this a lot with our clients, umbrella policies. Chris, do you want to give us a little overview on an umbrella policy?
Yeah, I'd say umbrella insurance is a fantastic additional layer that's inexpensive of liability coverage. So basically trying to cover any scenario where someone would be getting sued either for if somebody hurts themselves on a property or a car accident type of situation. This is essentially where, or say you're a landlord, you have tenants or Airbnb houses out or something like that. Basically, if there's a situation where somebody could get hurt on your property, or again, in a vehicle type of situation, where your typical, call it property and casualty insurance, will cover up to a certain amount of liability, a couple $100,000. However, if somebody is significantly hurt or injured and is suing you for dollars beyond that, and you have the assets elsewhere, then you could be on the hook, especially depending on how the insurance and court situation were to pan out. So getting that umbrella insurance is that extra layer of protection against a situation like that. And it's pretty inexpensive, right? So if you have a situation where you're being sued for $1 million because somebody got significantly hurt in a car wreck, then your car insurance would cover the first couple 100,000. The rest of that could be on you, especially again if the assets are there, and then the courts may say, "Hey, look, this is how bad this injury is. This person's never going to be able to work again, so they're going to be owed this amount to cover that." The umbrella policy can come in and fill that gap. And yeah, I think it's for every $1 million of extra protection, it's about 100, 200-ish bucks a year. It's not a totally expensive thing. It's important for almost all our clients we're talking to. We recommend it again, just because we're looking at situations where what can derail a financial plan. God forbid something happens, the person injured finds out that there's a lot of assets there. They might try and go after it, and then the umbrella policy can step in and help cover that.
Andrew, do you have anything to add on umbrellas?
It's the one thing when you're looking with your umbrella insurance, you want to coordinate that with your home and your auto to make sure your home and auto insurance are at the right proper deductibles as well, because umbrella insurance has certain specific requirements for liability for home and auto before an insurance company will write the umbrella policy for you.
That makes sense. Yeah. For mine's all bundled together, and I think you
Yeah.
even get a discount if you bundle them all together
Yeah,
too.
typically your insurance carrier will require you to carry first the highest level of liability for home and auto before they'll write that additional umbrella for the X level of millions that you would need for your to cover protect yourself.
Yeah, makes sense. Yeah, and as Chris said, we're big proponents of umbrella insurance. It's a cheap way to get you some more peace of mind and a little more coverage for your risk. And particularly in this litigious society that we're all living in, people get sued really easily for oftentimes for small things. And if you've got any kind of assets, and especially I think if you've got any kind of visible assets, whether that be you've got a famous name or you've got a big house, fancy cars, people are going to know that you've got assets there. And when they file suit, they're gonna go big after you. Big fans of umbrella policies here.
Yeah, and then you can divert more of because then it becomes the insurance company's job essentially to negotiate payouts and everything and settlements on their own behalf, right? Because if they're on the hook for the dollars, then that's just less things that you could be involved with. You can be like, hey, whoever your policies are with, be like, hey, this is a situation that's going on. Their attorneys get involved with the other side's attorneys, and then you can be the mix as little as possible because you already paid your premiums and your dollars are not necessarily typically on the hook that much anymore because typically the suing party is looking to deal with the insurance companies, get some sort of dollar settlement within policy limits, and then move on to the next one. So ideally, having that kind of firepower of the insurance companies to work on their own behalf, frankly, is better versus you having to be in the mix and deal with it for sure.
Yeah.
I wouldn't want to deal with it.
No, absolutely
So,
not. Yeah.
yeah.
Chris, do you have this? You have that ready?
Good.
And
Yeah.
I just want to say one other thing as we wrap up. We do not sell insurance at PCM. We get no commissions for recommending insurance. We just believe that it's important to cover all your risk bases. So I want everybody to know that we don't sell it. We just recommend it and are here to answer any of your questions about insurance. Whenever you've got questions, reach out, give us a call. Thanks for joining us today, everybody.
Yep.
Take care.
Bye, guys.